Welcome back. The glamorous investment of hedge funds, aren't they supposed to make money in any market? Well, they slumped in 2008, which is the industry's worst year on record, and investors fled. Now they may be coming back, and the question is, for how long? Paul Gordon is here with some answers. And Paul, first off, my question to you is, have they halted that rule of redemptions?
They have, actually. I mean, that's the main point. We had quite a stretch, 9 straight months of people taking money out of hedge funds. Finally, they're coming back. But quick word on what's going on at the moment. A survey by RSM McGladrey published today shows 60% of hedge fund managers believe the U.S. economy will return to growth next year. That's a relatively easy call. Just under half said regulators should be given more authority as well, and 3/4 said regulators may go too far. 1 point, though, just 8% said they would revisit their fees. And that may be because after a horrible year, investors are indeed coming back. Hedge funds actually beat most equity and commodity markets last year. Still, customers would have been better off holding cash, so they opted to do so by making redemptions. In May, though, funds tracked by Eurekahedge saw a net inflow of assets, $11.3 billion, the first gain in 10 months. And that's even though they didn't do particularly well. The Eurekahedge hedge fund index climbed 5.4%, roughly the same as the S&P 500.
As they come back now, they're doing much better than cash. They're doing much worse than long-only type of strategy. The long-only strategies still have not come back from the levels that they were. No, they've come back somewhat, but they're not back to where they used to be. And it's going to take quite a while.
The best performing hedge funds in the first 5 months were long equities and commodities. Funds focused on emerging markets outperformed those betting on North America and Europe. In effect, hedge funds have been riding the rally no different to mutual funds. The test may come this summer, when we enter what appears to be a correction, perhaps a big one. Of course, the hedge fund industry has to recover from more than just poor returns. A run of high-profile fraud cases highlighted a lack of due diligence among some fund managers and prompted a public backlash. Consultancy Hedge Fund Research says the buzzword now is transparency.
Investors will access the industry, where they will continue to put capital to work with active managers, but they will require certain protections in terms of third-party pricing, in terms of analytical transparency, that they're able to aggregate these positions, and in terms of service provider transparency.
And all of that may be coming. The International Organization of Securities Commissions says funds should register and disclose more about their risk management, while the group of 20 biggest economies want more oversight of what they call systemically important funds. And, Susan, one other fact from the RSM McGladrey survey shows that more than half of hedge fund managers at the moment believe the Dow Jones Industrial Average will be at or below current levels 6 months from now.
And someone predicting a summer sell-off, though, before then.
That's right.
So maybe
yeah, could be a big decline, maybe, but at the very least, not much upside.
All right. Paul Gordon here in our Hong Kong studios.